Welcome to Daily Finance News, where we bring you the latest updates from the world of finance. In today's video, we will be discussing Airbnb's Q1 2023 earnings report, which was released on May 9, 2023. Airbnb, which went public in December 2020, is an online marketplace for vacation rentals and experiences, with a presence in more than 220 countries and regions. In the first quarter of 2023, the company reported its first profit since its initial public offering, IPO, in 2020. But the weak outlook for the second quarter caused its shares to drop 10% in extended trading. Let's dive into the details. Airbnb's Q1 2023 earnings report. Airbnb reported a profit of $88 million, or 18 cents per share, for the first quarter of 2023, compared with a loss of $19 million a year earlier. The company's revenue for the quarter was $1.82 billion, up 20% from $1.51 billion in the same quarter a year ago, beating Wall Street's forecast of $1.79 billion. Nights and experiences booked, a closely watched metric for Airbnb, increased 19% to 121 million, and the company valued the bookings made in the quarter at $20.4 billion, a 19% increase. CEO Brian Chesky said on a call with analysts that the company had a strong, record-setting first quarter and increased its supply of accommodations for rent. The company is getting a lift from people who are traveling while they take advantage of the ability to work remotely and stay away from the office. More of those people are booking international stays. The company said cross-border bookings grew 36% over last year's first quarter, helped by travel to and within the Asia-Pacific region and bookings into North America. Airbnb's weak outlook for Q2 2023. However, the weak outlook for the second quarter overshadowed Airbnb's Q1 performance. The company predicted that revenue in the second quarter, which includes June and the start of the peak summer travel season, would be around $2.40 billion, which is below analysts' average prediction of $2.42 billion. Airbnb said second quarter bookings will be lower than they were in the same period last year, when consumers were busy booking travel after hunkering down at home during the outbreak of COVID-19's Omicron variant. Airbnb's response to rising prices. Airbnb has grown increasingly concerned about rising prices, which could be pricing out some consumers. The average nightly rate paid by Airbnb customers was $168, level with a year earlier, the company said. Price hikes in some places were offset by a slight shift toward in-city rentals, which tend to be lower in price than whole house rentals in beach and mountain destinations. Last week, the company announced a renewed emphasis on renting rooms in hosts' houses, which it said would provide rentals averaging $67 per room per night. Chesky said rooms would be particularly appealing to younger travelers who can't afford to rent an entire house. Conclusion. Airbnb's Q1 2023 earnings report shows that the company is continuing to recover from the pandemic, with a strong increase in bookings and revenue. However, the weak outlook for Q2 2023 has caused the company's shares to drop. Airbnb's response to rising prices by emphasizing renting rooms in hosts' houses may appeal to younger travelers who are looking for more affordable options. Thank you for watching Daily Finance News, and stay tuned for more updates from the world of finance. Rising interest rates can have a significant impact on companies like Airbnb that rely heavily on borrowing to fund their operations. As interest rates rise, borrowing costs also increase, which can reduce profits and make it more difficult for companies to access credit. This can be especially challenging for companies in the travel industry, where profit margins are often already thin. With higher borrowing costs, companies like Airbnb may have to raise prices to maintain profitability, which could make their services less attractive to consumers. In addition, rising interest rates can also lead to a stronger dollar, which can make travel more expensive for international travelers. This could negatively impact Airbnb's international bookings and revenue, which have been a key driver of growth for the company. However, it's important to note that rising interest rates can also be a sign of a strong economy, which can be positive for companies like Airbnb in the long term. A strong economy typically leads to higher consumer spending and increased demand for travel, which can drive revenue growth for companies in the travel industry. Overall, rising interest rates can be both a challenge and an opportunity for companies like Airbnb. While higher borrowing costs and a stronger dollar can create short-term headwinds, a strong economy can ultimately lead to long-term growth opportunities. As such, it's important for companies like Airbnb to closely monitor interest rate trends and adjust their strategies accordingly. Airbnb's latest earnings report reveals the company's first quarterly profit and a strong Q1 performance. However, a weaker Q2 outlook, lower bookings, and concerns about Rising rates have led to a 10% decline in share prices during extended trading hours. Despite this setback, Airbnb remains a popular option for travelers, particularly those taking advantage of remote work arrangements. The company has seen a 36% increase in cross-border bookings, with travel to and within the Asia-Pacific region and bookings into North America driving this growth. Airbnb's average nightly rate remains steady at $168. But the company is increasingly concerned about rising rates and their impact on consumer demand. To address this, Airbnb has renewed its emphasis on renting rooms in hosts' houses, which it believes will appeal to younger travelers who cannot afford to rent an entire house. Overall, while the Q2 outlook may be weaker than anticipated, Airbnb's strong Q1 performance and ongoing growth suggest that the company remains well-positioned for long-term success in the travel industry. As remote work and flexible travel arrangements continue to gain popularity, Airbnb's unique offering of short-term rental accommodations is likely to remain in high demand.